morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, on the Bourse Report, we usually take a look at some of the more technical aspects of investing, but today we're taking a step back a bit, and we're talking a little bit more at a higher level about some of the basic myths of investing that sometimes discourage the average or ordinary investor from getting started on their investment journey. And today we're just going to highlight how easy and convenient it is to get started on that particular investment journey. So let's take a look at some of those common myths or hurdles that sometimes are a hurdle in the face of investors or would-be investors. And the first one of those, or those particular myths, is that I need a lot of money to start investing. Well, that's not necessarily true. Across a wide range of investment products, services, and solutions, the starting amounts are quite low in many cases. In the case of mutual funds, for example, at certain providers in Trinidad and Tobago, you can open a mutual fund account and get started with as little as 100 TT dollars. So certainly not a lot of money to get started investing in the case of mutual funds. With respect to trading on the local stock exchange, now while account opening minimums do vary from provider to provider, there are more than 30 stocks on the Trinidad and Tobago Stock Exchange that are trading at less than $50 a share. What does this mean for the everyday investor or the aspirational investor? Well, it basically means that you can create a quite diversified portfolio with a fairly small starting amount of funds to get going on your investment portfolio. And in the case of retirement funds, for those folks who wish to set it and forget it in some sort of in a particular manner, of course, monthly contributions to retirement funds for certain funds start as low as $200 a month. Again, what does that translate into? You don't need a lot of money to get started in investing. So regardless of how small your starting or initial balances are, the key term is that you should be getting started in or along your investment journey, and you don't really need a lot of money to get started, as mentioned. The second myth is that you need a lot of experience to invest. And again, the proliferation of products, services, and solutions in the Trinidad and Tobago investment landscape have addressed that particular need. You don't need to be the next Warren Buffett or some sort of financial guru to make the right investment choices. And that's because of the investment structures and the wide variety of investment professionals and those particular types of products that are available. Certainly in the case of mutual funds, these types of investment solutions cater to those individuals and companies or institutions with lower levels of investment experience, or may not just have the time to do their own research. So in a similar case, retirement funds also cater to those persons who do not have as much investment experience as yet. And certainly while you go along your investment journey and build up some of that competence for your own selves, certainly these types of products will help to get you in the door and get started without having that very significant level of experience. When you're looking at overall markets and single stocks, well, index exchange-traded funds and specialist exchange-traded funds or ETFs would certainly also help those who have less investment experience or investment knowledge. For those of us who would like to dabble in specific stocks, if you don't have the correct investment advisor or you feel that you need to do your own homework, that would require a little bit more investing experience. But again, you could read the plethora of research that is available out there to make some decisions with single stocks. But typically, you would have to have a little bit more investment experience or knowledge before embarking on that particular aspect of investment. And overall, if you have generally more wealth, but just maybe not enough time or experience, you can look at portfolio or wealth management options, again, available by several investment services providers in Trinidad and Tobago. Regardless of your level of investing knowledge, it might make sense to consider that portfolio wealth management service to help make better investment decisions for your wealth. One of the other and more sensitive topics in terms of myths is that I need FOREX or foreign exchange to access international markets or get exposure to international markets in my investment journey. Well, that's not necessarily true. Of course, if you'd like to buy international stocks directly or international ETFs or even invest in US dollar mutual funds, for example, you would need that foreign currency. But if it is the case that you just want to get some international market exposure, there are several mutual funds out there, for example, where you can invest in TT dollars and still have a significant proportion of your investment exposed to international markets. One example is the Save Invest TT Capital Growth Fund, which is managed by Bourse, where there is 44% of the assets in that mutual fund are exposed or invested in international assets, and you do contribute or you do make your investment in TT dollars and you redeem in TT dollars as well. Similar case for some other major providers, RBC's TT Income and Growth Fund with 58% of their portfolio in international assets, RBL's Caribbean Equity Fund, 46%, and the Scotia TT Growth and Income Fund with just about 33% of the assets invested in international markets. These figures were updated as at the end of September 2021, with the exception of Republic's Caribbean Equity Fund, which is December 2020. So the bottom line is you don't need to have explicit access to foreign exchange to get that international market flavor or exposure within your portfolio. There are several investment vehicles locally which can give you that while your investment is in TT dollars. And finally, one of the biggest hurdles is that investing is too risky to me. And again, because of the way the financial landscape has evolved, that is not necessarily true. There are investments catered to the lower risk tolerant investors, as well as those persons who want to be a little bit more aggressive and go for greater growth. And certainly as we take a look at this investment landscape or this investment map, repurchase agreements and income funds are catered to the lower risk type investors. Retirement funds are somewhere smack in the middle in terms of a moderately risky portfolio, and they take a much more longer term view of investing. When we think of bonds, we often think safety, but bonds can range the entire spectrum in terms of lower risk to higher risk, and it all depends on the type of bonds you're investing in. If you're looking at investment grade bonds, they would typically be lower risk in nature and offer a lower return. If you're really going for it in terms of returns, you could look at higher yield or speculative bonds, but they of course come with additional risk and tend to be on the higher end of the risk spectrum. Equity, mutual funds, and exchange traded funds tend to be between that moderate to high risk category or threshold, depending on the types of equities, equity mutual funds and ETFs that you choose. And of course, individual stocks, because there is no diversification, unlike ETFs and equity mutual funds, you do tend to take a little bit higher risk by investing in those single name stocks. So overall, if you don't want to be too risky, there's a product for you. If you want to be more risky, there's a product for you. If you want to be just smack dab in between, there are solutions for you as well. So the bottom line is get started with your investment experience, get started with your investment journey. There's nothing really to stop you, and it will certainly be rewarding over the longer term, the earlier you get started on that particular investment journey. But that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, and check out our website at bourseinvestment.com. And of course, you can catch us in today's business section of the Bigger Better Trinidad and Tobago Guardian. And for those of us who are celebrating Shubh Diwali to the Hindu community on Thursday, and however you choose to enjoy that particular public holiday, do be safe and enjoy it. And of course, stay safe and get vaccinated, and see you next week on the Bourse Report.